Welcome to UBP TV. Our scenario remains positive on the world growth. It is expected to accelerate next year to 3.6% after 3% estimated for this year. But how much growth could be expected by regions? First, the US growth. We expect a 2.5% GDP growth next year after 1.5% estimated for this year. Consumption should evolve around 2% thanks to positive wealth effects, less fiscal drag on US households, and regular decrease in the unemployment rate. Investment should also be dynamic. The housing sector should remain positive, but more investment from the corporate sector is expected next year. Firms are cash rich, new orders are better oriented, and their cash flow are also increasing strongly. We expect that corporate investment to take a new leadership in the US growth, underpinned by the New Deal in the energy sector and also moderate unit labor costs. US exports should also benefit from the rebound of the world trade. World trade is said anemic in 2013, and a global rebound is expected next year. Despite the large uncertainties on the budget situation and negotiations about the debt ceiling, we expect the fiscal situation to be a lower drag on activity next year. What is expected scenario for Europe? Europe continues to exit gradually from recession. The rebound is led by the improving situation in Germany and also the United Kingdom. Within the Eurozone, peripherals are better oriented. We see the Spanish economy entering in a more positive trend after the reforms adopted, and even if uncertainties still exist about its banking sector. Next year, we expect a 1.3% GDP growth for the whole Eurozone and a strong 2.5% for the United Kingdom. Within the Eurozone, all countries should come back to a positive growth expected next year, even if it will be a modest one. What could be expected from emerging countries? China's economy has recently stabilized and the 7.2% is expected for next year. The challenges are still important. The local debt, the strong rise in housing prices, and the shadow banking sector create large imbalances that could affect the growth scenario if attached risks are not actively managed. Outside China, there are still a lot of uncertainties in emerging countries after the mini-currency crisis seen last summer. No major reforms have been yet adopted to solve structural current account deficits, particularly in India and Brazil. So all in all, growth in emerging countries should be around 4.8% next year in aggregate terms. This is above the 2% expected for developed countries, but it shows no particular acceleration in emerging for the past 2 years. What are the missions of the central banks next year? Monetary policy will globally continue to support the recovery, but communication could be different across the regions. The Fed should continue to help the rebuilding of the US growth, and it should stay vigilant about the level of the 10-year US yield as well as the wealth effect. We should expect the Fed to begin its tapering once US growth strengthens, and an appropriate timing could be the first quarter next year. The ECB is expected to deliver more liquidity injections next year and eventually to decrease further its key rates. The Eurozone recovery is still nascent and it requires very accommodative monetary conditions. Emerging central banks should continue to fight against inflation in the next month. It is too early to bet on some monetary easing before seeing lower inflation in India, in Indonesia and Brazil. So our scenario remains optimistic for next year as we expect the world growth to continue to accelerate and to benefit from a stronger capex in developed countries. Thank you and see you soon on UBP TV.